Welcome back to Bull, Bear, and Brief, where Arpit Sharma and I come to you every week and bring you the news of the week from the markets. I'm Joe Quartucci, one of your hosts.
I'm Arpit Sharma.
We're starting to get better at that intro as we are learning the ropes of hosting a podcast. This week was basically kind of a flattish week. I guess if you're talking about technology was up 1.5%, continues to be the market leader. But we certainly saw, the S&P 500 and Dow about flat, Dow slightly down. As I mentioned in previous episodes, the Dow hit that 50,000 that it did when Pam Bondi, our former Attorney General, talked about the Dow at 50,000. Has not been back since. I will save everybody the suspense. There will come a day where indeed we will be back at 50,000. That is not a guarantee, and a good reminder for me to tell everybody listening, this show is about entertainment and education. It is not for you to take action. That should be done between you, your financial professional, and your tax professional. Do not take action on this. Today's show, we'll cover last week's market. We're going to talk a little bit about debt and deficit, how it affects markets long-term, short-term, and medium-term. So you can kind of begin to figure out how you want to think about the 39 or $38 trillion in debt we have and rising. But this week was all about the Pakistani pivot. Had some thought that we might be finding some traction on peace, even though the Strait of Hormuz, which had previously been open, was closed again. So oil was up 13% this week, putting us back at around $94 per barrel. Brent, it was up 14%. So they're pretty close to one another right now, Brent and WTI. So Arpit, that's kind of the lay of the land on markets. What comments or thoughts do you have on that?
Yeah, no, it was the fourth straight week of markets being positive. A little bit less positive this time around, barely eked it over. And there are some days where I thought it was going to be actually fairly negative. We saw Wednesday, it was a fairly decent decline, but then Thursday and Friday, both pretty good. A couple things to kind of take away. War in Iran, still happening. No peace solution in sight, right? We had JD Vance he was supposed to meet in Islamabad, got pulled back. Overall, market seems to kind of shrug that off. Oil's at 94. We do constantly monitor the price of oil here. One thing we look into, or like I was talking about earlier, was futures curves and the future price of oil. So for those who don't know, futures are an investment product that you can use to essentially do a couple things. Where you can use it for hedging purposes if you own a price sensitive business, so something that's in oil or agricultural, like farming. What you may want to do is you have a crop or a product that you know will be produced in 3, 4, or 5 months out, but you're unsure of the price in 3, 4, 5 months out. So you can go to the marketplace and buy a futures, which will essentially say, hey, I will guarantee that I will sell this amount of this product at this price, this, many months from today. And now in 3 or 4 or 5 months, you are going to get this much money. And now if the markets go up and the commodity price rises, well, you don't make that, right? That's whoever bought your futures product, that's what they get. If the markets go down, well, you sold at that price, right? That's their loss. That's not your loss. So it is
Another way of saying hedging. They're hedging their bet against the price going out of a range that would be unfavorable for them. And so by hedging that way and keeping it from going out of a price that would be unfavorable, they also prevent it from becoming a price that would be favorable. Is that fair to say?
Yes, 100%. And at that point, when you start hedging this, you don't really care at that point what the price becomes in the next few months. You do care if the price goes up. That kind of sucks, right? But ultimately, you just kind of want to make sure that you have a stable revenue or a stable source of income that you can relatively forecast. Based on futures curves, what we're seeing in oil is that in the longer term months, so we can look anywhere from 8 to 10 months out, futures curve for oil is going down. Right? So we call this backwardation. Contango is the other fancy word that basically saying when the future curves are rising in the longer term, basically saying that people are expecting prices to be higher in the long term. Oil prices are expected to be lower in the longer term. Now, futures markets are a little bit different from the actual traders of the physical commodity. The actual traders of the physical commodity themselves are relatively bearish. They think oil should actually be at a higher price in the longer term because they're not seeing any resolution on the horizon. So there's a couple of interesting things happening in the oil markets. But one of the big trades that we saw, or that we're still continuing to see again, is the belief that Trump and the U.S. administration will kind of tackle out of this war. again, in relation to what they did during the tariffs when prices and markets moved against Trump and his admin. The problem is that tariffs and foreign policy decisions can be reversed by just a stroke of a pen. You can't reverse yourself out of an actual physical engagement, a war, a conflict. You require both parties to be relatively aligned on seeking some peace agreement. And at this point, I'm not sure, or I'm not 100% certain that Iran's interests are fully aligned. They might want to prolong some level of price pain to the U.S., right? They might want to prolong control of the strait. They've discovered in this war, in this little conflict there, that the closing of the Hormuz Strait is more powerful than a nuclear weapon right now, and it's something that they will actually be able to yield.
It's an economic nuclear weapon, if you
Yeah,
will.
it's an economic nuclear weapon. It just takes a little bit longer to kind of find out, and there's aspects of the economy that we're starting to see may be greatly impacted in the future, not immediately, but in the future, that is being that is stemming from this closing of the strait, and it doesn't have to do 100% with oil, with actual oil. Oil itself, like we said on the last time, is a fungible product. It can be replaced relatively easy. We're seeing it be replaced, kind of, from U.S. shores. Now, this is not
And
reduced price of
domestically,
oil,
at least here in the United States.
right? But there are other things that cannot be replaced from us. Jet fuel, for example. Europe relies heavily on jet fuel because they don't have major fuel refineries in Europe like we do in the US. US, we have Houston, massive refinery. So almost all of our jet fuel production comes out of Houston or the Northeast, where we have major refineries. Europe does not have that. So Europe is facing major gas issues, major gas prices. LNG for us in the US is, what is natural gas prices, around 350, 360
Around
ish,
275.
right? Or even lower, right? In Europe, it's at 20, 18 to
Yeah.
20 range.
This is one of the reasons why a lot of natural gas producers in the United States would like to export natural gas right now because they can get, 18 times what they can get here in the United States. So,
Yeah, they would love to. But what if Trump and his administration says, hey, we need to maintain domestic production so we can keep our prices low? Well, they're just not going to export. And there are signs that Trump and the admin is trying to encourage excess drilling. If
yes.
you're a driller, you're not going to. Why invest billions into massive drilling equipment, hiring people who's doing surveying, and opening up pumps? Once you open up a oil well, you can't turn it off,
Right.
because if you do, you ruin it. It becomes ruined. So these
Yeah.
guys, they like to
You can
take their
slow down the
time.
production a little, but you can't
You
stop it.
can't, once it's done, once it's up, you can't stop it. Which
Right.
is also another big issue in the Middle East, is that oil production is slowing. Those wells might be nearing the point where if it continues again for a month or two, those wells may be ruined, which is
Mm.
problematic,
Right.
right? And that's the main
Used to
point for Iran trying to declare peace, because if Iran's exports are all cut off and Karg Island's at 80% capacity, and once it hits 100%, they can't, all of Iran's oil wells risk completely
right.
shutting down. So these are, big issues that we're starting to see in terms of oil supply, but
It
also,
is the leverage that I think Iran has over the United
yeah,
States, and obviously, the United States has the military might to really do a lot of damage there, but that's kind of a lose-lose scenario. And there was some news over the weekend that the Islamabad rally that we've been enjoying, has not yielded any fruit, and these two countries are not going to be talking anytime soon. And so we'll be curious to see what the markets open at. But I will say, despite all of this noise, despite all of this negativity, despite all of this known issues with Iran and the United States, long term negative effects from higher energy prices, the markets are still at or near all time highs. So they have shrugged off all of this news. I do want to touch on a few more things on the market that I thought were interesting. Intel had its best single day since I was born in 1979 with
back
a
to
24
2000.
24% rally in a single day. So that's kind of interesting. For those of you who are big crypto enthusiasts, a big week for crypto, up 5.6%. I did notice also crypto trades on the weekend as well. It is up again overnight or today,
Mhm.
finishing over 78,500 today, which is another move forward. Obviously, you and I, Arpit, have had great discussions about cryptocurrency over the years. You're not a huge fan. I'm not necessarily a huge fan either, but it's undeniably become something that is a part of the conversation when it comes to investing. I tell people all the time, don't forget it's very speculative. It's okay if you're using it as a long term hedge against what we're going to talk about later today, which is debts and deficits. But don't be surprised if along the way you are going to see massive amounts of volatility, typically between 3 and 4 times more volatile than the NASDAQ. So
Yeah.
It's kind of like trading a leveraged Nasdaq fund in terms of its volatility level. It's very, very high. So if you are somebody who doesn't enjoy volatility, you will not enjoy investing in cryptocurrency. So, but we did see it move up. We also saw metals move down. We saw gold and silver drop on fear
Mhm.
of rate hikes, and then for silver, just an industrial demand worry. I think prices on silver just got really, really, really
Nasty.
outrageous at the beginning of the year, and we're still seeing some levelization, some normalization on the silver prices that probably is healthy if we're going to see a constructive move forward.
Yeah.
Any comments on cryptocurrency, silver, or Intel's rip higher, biggest since my 47 years that I've been on the planet?
No, well, I mean, no comment on cryptocurrency. I'm gonna keep it civil. On Intel itself, yeah, Intel and pretty much any semiconductor. I don't know if you saw Joe. Semiconductors up 40% on the month.
I mean, obviously, we track that very closely, and I'm not going to get into the reasons why we're big fans of semiconductors in our personal investing. And for what's going on in the world right now with artificial intelligence, for what's going on with the world in terms of smart weapons and drones,
Yeah.
autonomous vehicles for both commercial use, but also for military use. If you don't understand the role that microchips or semiconductors play in your everyday life, every single person who has one of these, everybody who's got a computer like the one that Arpit and I are coming to you from, all of that is driven by semiconductors, as well as
Hmm.
probably one of the most disruptive technological advances of any of our lifetimes, which is artificial intelligence. All driven by the engine that is semiconductors that we talked about before. So, not at all surprised, Arpit, to hear they're up 40%.
Yep.
As I look back at our own semiconductor portfolio, I know that it's done really well, but let's just talk about SMH over the last, which is the semiconductor ETF, over the last year, up more than 120%. So, seriously big gains there in that ETF. Does that mean you should run and buy it? No, that's not what I'm
Nope.
saying. Make me backhand you. I'm saying that it's undeniable to see that when markets rally, the leader in that has been semiconductors. Is that fair to say, Arpit?
Yeah, no, and it's the tide that's lifting all boats, and not only just semiconductors. Something I want to also mention now: GE, Vernova, utility companies have all exploded. Anything related in any form of semiconductors, data centers, or electricity generation have skyrocketed so far this year. So again, it's the rising tide. Everything but software.
Well, and again, I hate to keep sounding like a broken record, but that's where natural gas prices are likely to remain elevated. That's what
Yeah.
we use to produce electricity, and we're using large amounts of electricity. I didn't really plan to talk about this, but I will say, what are your thoughts on like micro nuclear? I know we talked about nuclear in a previous show, but like the micro nuclear stuff.
So I'll be honest.
Not your
I don't.
area.
I'm not a nuclear engineer. My knowledge of nuclear power comes from just the economics of old nuclear power, right? From what I know, dude, what is the major micro nuclear company? Starts with an O. It's like Octo
There's
something.
Nano and then Oklo. Yeah,
Oklo is
Oklo.
the main
Yeah.
one.
Also another one called. There's several of them that are out there. They're all
Yeah,
very small companies.
no revenue,
Yeah.
right? Massive costs. From what I know about micro nuclear in general, is
Speculative, what you're
it,
saying.
it's highly speculative, but for the most part, nuclear does not make money until 7 or 10 years after being built, but they take
And
on massive costs.
the idea, and this is where I'll debate you
Yeah,
around micronuclear, is that it's quicker and potentially faster at getting to a
potentially.
place. Yeah, well, it's like any technology, right? There's a time where it isn't doing what it's aspiring to do, and it looks really
Mhm.
terrible. And then the second the breakthrough happens, you're too late. So it's you
Yeah,
have to invest speculatively if you want to make any money from it. So it wouldn't be something that I would say a person should go out and do or own as a part of their fundamental core portfolio. But if they've got, we talk about core, sometimes we'll talk about explore. My core is this is my plan, my game plan, my safety net, the things that I'm going to do no matter what. For a lot of people, that's index investing. For a lot of people, that's some sort of risk management. But on the explore side, which is I'm going to take some rifle shots and see if I can't get outsized returns. There's a good possibility, I think, that micronuclear could be a breakthrough for electricity generation in this world where AI is sucking up so much electricity.
yeah. I mean, I can definitely see it. I can definitely see some level of, from especially from the big tech companies, right? I can
Take it
definitely
down to the
see reopening of nuclear power plants. We still had so many that were closed during the 90s, right? So I can definitely see it becoming a thing. Until then, natural gas and my way is of investing is more so just I don't like to speculate too much like that. I like to see some level of stability and earnings, and that makes you miss out the 10,000% returns, but that's also, kind of how I go about doing it. I rather just stick to what I know. And
I think
also, I don't know nuclear.
I think it's important to remind everybody this is not advice, but
Yeah.
in general, what Arpit is saying is absolutely great way to have from when you're developing your own personal philosophy or you're deciding who you're going to hire to help you develop a philosophy. You definitely want to have that like really disciplined approach at the
Yeah.
start or with your basics or with your what I call the Alamo of your financial life, which is if everything goes wrong, I want to make sure I'm still going to be okay. And we can't control what
Mhm.
happens with, the indexes or any individual stock, but if you're also 25, 35 years old, or maybe even 45 years old or 50 years old, and you're still looking for ways to try to find rifle shots, take a look at micronuclear, do some research, try to find out which company is most likely to win there, and just see if it is something that you think is worth investing in. Definitely not advice, definitely just talking through it. Something that I think about in my own personal economy. Talk to your financial professional about it before making any type of decision there. Did want to touch one more time on Intel, and then we'll move on. Which Elon Musk is a big reason why we saw Intel jump a lot. Basically, saying he's going to buy some of their terafabs,
Mhm.
um, allowing them to be involved in SpaceX, XAI, and Tesla. And so, from Intel's perspective, I think there's a anytime you're touching anything Elon Musk has touched, whether you like him, hate him, or somewhere in the middle, you can't deny the guy is he moves markets. He's got the reputation, whether it's deserved or not. He's a big visionary. He's an amazing engineer, an amazing ability to work at a lot of different things at once. And so if he's perceived as being involved, the following for Musk is going to drive whatever stock is doing that forward. So I think that's something to mention about Intel's rise this week, because some of it was being adjacent to Elon Musk.
Yeah.
Comments on that?
No, nothing on that one. And then alongside also Intel, we had 100 companies report last week, and generally earnings across the board were all good for the most part, except software.
Interestingly enough, Tesla did trade down for the week, 3.7.
Pretty bad earnings, and I think
Well, they beat on earnings, but they guided kind
it
of
was
poorly.
yeah. On the
And
initial
then
release, they were up. It was on the when Musk himself actually opened his mouth and started talking, it started
but
going
that's
down.
an because the very same thing caused Intel to rise or had a role in Intel's rise. But I think there is some bigger concerns with Tesla because there's a demand issue with their product. No one's buying, or they're not buying at the rate at which it was forecast to be bought at. But the reason why I think Tesla gets a pass a lot of times is it has stakes in lots of other things.
Mhm.
It does also own quite a bit of Bitcoin, I believe, still on their balance sheet. So there's some of that as well. And I may be wrong about that, so you can correct me next week. Let's shift gears. We're 19 minutes into the show. I do want to talk about debt and deficit. It's something I talk a lot about and actually have studied quite a bit and
Yeah,
learned quite a bit on. The amount of debt we are sitting at now is around 39 trillion. So we're
126%.
Yep, we're very, very, very high on that number. We are growing $7.58 billion per day is how much our debt grows. So it is an astronomically large number, about $87,000 per second. So as we've been talking on this show, that clock is just tick, 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 tick. A lot of people will come to me and say, Joe, I'm really scared about the future. We've got this debt. The deficit's sitting at around 1.8, probably 1.9, maybe even $2 trillion for 2026 fiscal year. President Trump is asking for $1.5 trillion in military spending, which is a 50% increase over last year. The interest on the debt is getting bigger each year. So we talk about that. What I'd like to unpackage with you today over the next 10 minutes or so
Yeah.
is what does it look like short term? What does it look like medium term? What does it look like long term? Is this a real problem? Is there ways we can stave it off? How should people be thinking about their investments with regard to the long-term debt? How does it affect inflation? How does it affect the dollar? How does it affect the reserve currency? That's a lot of things. So you can kind of approach it any way you want, but let's just start with the absolute number 39 trillion with another 2 trillion or so being added this year. Any short-term threats that make it look like, hey, you better run for the hills right now?
No, I'm gonna answer actually on all three. No, as of right now, regarding deficit, no to short, intermediate, or long. And here's why.
No short, intermediate, or long?
No long. It's a
Wow.
crazy
I'm blown
take,
away
right?
from that.
Crazy take. And here's why. So this is something that I've had the chance to study this argument for quite some time. And a lot of people disagree with me, and that's good. This argument regarding the US's debt constantly growing and constantly being an issue has existed for a lot longer than 5 years, right? Just a lot longer than 10, 15, 40, over 40 years, this argument has been made, which is a long time to be making about some collapse regarding debt for 40 years and it's never happened. Now, again, that's not saying that it will never happen in the future, right? But we've seen, at least I've seen this a lot more often since '08, is this want to predict the next financial crisis. This want to be, I want to be the star of Big Short 2 with, Steve Carell and Batman up there.
Maybe by
I
then
want
you
to
can
be
be
up there,
business and we can be the actors.
right? And I've seen this as long as the U.S. Reserve and the U.S. Treasuries are still used as the primary source for any form of risk-free investment, there
What
will
you're saying is,
never be a problem.
I want to clarify what you're saying is as long as the United States is the world's reserve currency, meaning the vast majority of transactions financially are settled in US dollars. Is that what you're saying?
Yes, but also another thing, this gigantic multi-trillion-dollar market called the repo markets. These
Mhm.
are, for those who don't know, these are essentially markets that big banks, JP Morgan, Bank of America, Wells Fargo, every day they engage with the repo markets because they have to have a minimum amount of safety or liquidity on their balance sheets and they engage with these markets. And not just them. International banks also do this. Repo markets are all done in US treasuries.
Dollars, yeah.
So
Alright.
I was gonna
I
say,
gotta
mhm,
Oh, go ahead.
I
I
was
was
gonna
just gonna
say,
say no, you go, you go.
as long as this remains, as long as the US dollar remains the dominant currency, as long as repo markets and all forms of essentially risk-free investments are done in treasuries, until there is a
You
liquid
said risk-free.
risk-free, yeah,
When you say risk-free, you meaning if you hold it to maturity.
yeah, hold it to maturity.
I
And
got you.
and for the most part, treasuries are all risk-free. Doesn't
Right.
matter,
They're
right?
considered risk-free.
Consider risk-free. Even long-term treasuries are considered risk-free. If you're engaging in when we do discounted cash flow analysis for a stock and we want to hold a stock for 10 years, we compare it to the risk-free rate for 10 years, which is the 10-year treasury.
And that's modern portfolio theory, and we're also digging into modern monetary theory, which you're basically on the side of the institutions on both. You're saying from a modern portfolio theory perspective, the risk-free return is these treasuries, and you use that because that's what you learned when you were getting your CFA. I also learned it when I was getting my CPWA.
Mhm.
That's what you use to kind of do any fair or
Yeah, fair value.
baseline net for stock. But on the modern monetary theory side, what you're also saying is that really debt is not what we all think it is,
Yeah, it's not.
as long as we are the world's reserve currency. But, Arpit, every single country who was once the world's reserve currency ceased being so. And at some point in the
Agree?
future, don't you think it's likely or possible at least that the United States will no longer be the world's reserve currency? And so I'm going to tie this back into China and then I'll let you talk. I promise.
Yeah,
I'm sorry, not China, the Iran war. Iran is trying to settle transactions in Chinese renminbi. That is an effort to weaken the
yeah.
United States reserve currency status over time. And that's been underway since before the Iran conflict began.
Mhm.
A lot of our adversaries, Russia, China, Iran, Turkey, to some degree, would like to see the United States' status as the world reserve currency ended because it gives us tremendous economic and political power overseas. So I guess I'm just saying you're saying short, medium, and long. There's this is not a concern, but I'm saying what happens if we lose our reserve currency status in 15 years because people begin to lose faith in our debt?
So, a couple points, and that is the main argument, right? The main question is replace it with who? China?
Today they can,
China. I mean,
but
today
what
we
about
can.
25 years from now?
But again, replace it with who? It doesn't like. I hear the argument like all long term. Again, there has to be some logical way to how that's going to happen. So the main way is that maybe U.S. is ended. Now that world is going. You're going to care about currencies. And at this point, the global financial system is so intertwined with the US system, it's not going to exist without the US system. And then
Right.
the third point, the main point
It would
is,
have to be it would have to be like a absolute revolution of how
yeah, how
currencies are done, which is why so many
it's not
people
going to be Bitcoin.
are looking at cryptocurrency. They're saying fiat currencies, which is the dollar is a fiat currency. So is the Chinese renminbi. So is the euro. So is the yen.
Yep.
So are all the dollars that are out there in the world of any kind. They're all fiat. And that system lends itself towards the creation of too much currency, which deflates the ability for it to work, which is a long, long standing multi century problem, and why so many people are attracted to crypto. Again, not saying that that's going to happen because I don't know the future, but I'm
Yeah.
saying that the
That's the
next
argument.
time the next time there is a significant financial crisis, which no one can predict, don't be surprised if you see a lot of people running to crypto. Look at Argentina. Look at what happens in countries that have failed currencies and how they have adopted crypto in those places as a model. I don't want to go too long on that subject, but I do want to point out a couple of things and see if you're familiar with them. The CBO is estimating that our debt to GDP ratio will hit 175% around 2050 to 2060. That's a long time in the future.
Yeah.
That's somewhere where I start to look at between 15 and 30 years from now is where I grow concerned, and I can give you the reasons why. There becomes a debt spiral threshold where the interest on the debt alone causes the problem to become so fast and rapid that we cannot resolve it. And you might be familiar with this, and I'm curious if you are. The Reinhardt Rogoff finding, which was a 2010 study that found that countries with debt above 90% grow at an average of 1.6% annually versus 3 to 4% for lower debt nations. Until about 10 years ago, we were below that 90% threshold. We are now above it, well above it, and continuing to move higher and higher on that threshold. So if you couple rising debt with lower growth, I've always heard people who are part of modern monetary theory,
Hmm.
MMT, say we'll grow our way out of the debt. But if our growth rates are muted because we have debt, then that problem becomes worse, and it turns into a spiral. So I'm asking you if you're familiar with the concept of the Reinhardt Rogoff finding, if you're concerned about a debt spiral at some point in the future, and if you have any agreement with me whatsoever that we should take steps to mitigate our debt load between now and say 2050 or 2060.
Yeah. So one, I am familiar with the findings. So familiar with the counterpoints on it is that, again, the main one I'm always going to say, none of the guys have reserve currency countries that are, that they're investigating, right? Over and then I have seen this argument of once your debt hits 90% or 110%, there's no line in the sand on this argument, right? I can point to you already know this, the main counter argument, Japan at 220%. Now, I don't want to grow like Japan, I'll be honest with you. That's a pretty bad growth rate,
They've grown very slowly,
but
but they have had low inflation.
yeah, they've had low inflation, but the US is a powerhouse in terms of innovation and technology, as well as just, again, this massive. I don't think people understand just how much of a buffer being the reserve currency, being the de facto risk free, government bond of the world, like how much of a buffer point and different tier that puts you on. US growth rates in the last 5 years have been greater than most other country growth rates ever. I mean, we're looking at
Yeah, but
substantial
Arpit,
growth.
that's okay. We put $8.5 trillion of printed money into the system. That's going to create some growth. Wouldn't you agree?
Oh yeah, I agree. But that's why we look at inflation adjusted growth rates too. And our growth rates are massive. And a lot of that
You're
stems
saying
again
you're
from
saying
corporate spending.
growth minus inflation, the real growth rate, which is what the GDP report is, has been above the trend.
It's been pretty good, yeah.
I would agree wholeheartedly with that, but you just can't if you can't ignore the amount of sugar we put into the system.
Agreed. Yeah.
And if that's the answer, then why are any of us paying taxes? Why couldn't we just print more money, put it in the system, and all live tax free? I just don't.
Oh,
I,
that's
s-
that
I
would
said that.
that would ruin the fiat currency then.
Well, that's that. What you're basically saying is that I'm right that there are some limits on what you can do in terms of modern monetary theory. It has to be managed, right?
Well, and those limits you can kind of gauge that level of risk. And do you know how we gauge that risk? or the likelihood or the
Tell me,
riskiness,
enlighten me, oh wise one.
long-term treasury yields. That's
Well,
the risk. That's the risk.
long-term treasury yields need to remain, muted. They need to go up. They need to go down. Tell me the reason.
If we're looking at 10 and 30-year yields start rising substantially, that's
Which
markets
they
pricing
are.
in
They,
default risk.
they have been. Yeah.
Yeah,
Not
so
not
yeah,
I wouldn't say substantially, but since the
they're
Iran,
higher than normal. Yeah.
yeah, or I'm sorry, since the tariffs
Mhm.
began, we've seen 10-year and 30-year treasuries rising in spite of the Fed reducing interest rates.
Exactly, yeah, and that's why we saw the 10-year rise from 4 at the start of the year to 4.4. It's because
Yeah.
you're pricing that risk. Again, it's nothing compared to what we've seen before, and ultimately, it is still, in the grand scheme of long-term events, still not the most destructive yields. Now, I would like to say I'm also not on board with modern monetary theory and think just excess debt, spend debt your way through and grow it out because I don't think that's very founded. I would like to
Well,
see the debt controlled. I'll be honest with you.
I
It's
think when you look back at the periods of time in history where we were thoughtful
Mhm.
about our approach to deficit, the economy did grow faster. Treasury real yields would stay relatively low, and that's borrowing costs, which means credit can flow more freely, which has a exponential effect on growth. And you're borrowing money, you get that leverage, you get additional growth as long as there's no defaults or low defaults.
yeah.
So I mean, I totally agree with you. And so I'm gonna disagree. You said short term, medium term, and long term, it's a non-issue. I'm gonna say short term, we're going to continue to have a sugar rush. It's somewhat left over from COVID. This is my opinion, not based on any kind of PhD level analysis, but also the Trump tax cuts being made permanent and some additions
Yeah.
like no taxes on Social Security via, it's not really truly no tax on Social Security, but it's tax on Social Security via additional standard deduction for people over the age of 65.
Mhm.
Also, the no tax on tips. Those people that are in those two categories are going to spend money or utilize that money for things. The wealthy are probably not going to spend that money. That's just going to get saved and put back into their investments,
Investor.
which is why I think you'll see markets do pretty well. Barring there being an escalation over in Iran or an escalation in Taiwan. So I think short term sugar rush. 5 years out, we're starting to have a hangover on growth. I think we get back to that 1 to 1.5% trend line on GDP growth rate, which exacerbates the problem. And by 15 to 30 years from now, we are in the reckoning stage if we don't take corrective action. So I'm going to be on the record for this. 15 years from now, I'm going to be 62 years old. I want to look back at this episode and see if I was right. I think at that point, treasury costs will be higher because the market will ask for a premium in order to lend you money for 10, 20, or 30 years or longer. By then, I wouldn't be surprised if there's a 100-year treasury that exists because that's the direction we're heading in. The only way we can continue to grow this economy is through credit. So I'm going to disagree with you there. And I guess, and you're 27 years old. Is that right, Marpet?
Yeah, I'm 27 in 2 months.
27 going to be 27 years old. So you and I, 15 years from now, you'll be 42. So you'll be closer to where I am right now. I'll be 62. And we'll see which one of us can give each other the finger and say you were right or wrong. We're gonna have to
I
mark this explicit.
It'll be me because that'll be my prime years when I if that goes wrong. But also, you know,
Here's the good news before you
yeah,
answer that. The good news is no matter where you are, what age you are, the idea that you are sunk because of this is false.
I agree.
There is always a way to mitigate the damage that is being done by bad decisions by our government. Always a way to mitigate that. So be thinking and researching and asking your AI chatbot and asking your financial professional and your tax professional, how do I mitigate this thing that I see as a potential problem? Go ahead, Arpit.
No, I was just gonna say I do disagree, but we've discussed it, and I think only time will tell. Um,
I hope you're right too, by the way,
yeah,
because
yeah,
I'd rather.
like for the sake of everybody's retirement.
Yeah. Well, again, like on that subject matter, and then we'll close out the show because we don't want to be here too long
Hmm.
since it is called Bull Bear and Brief. What I'd point out to all the listeners is that while this debt should be paid attention to, it can be mitigated, and it can be mitigated through growth. It can be mitigated through austerity, which tends to be pretty painful.
Yep.
But for you personally, it can be mitigated by understanding how debt deficits affect asset values. Typically, higher debt means higher inflation, or higher deficits mean higher inflation. And that means looking for assets that are going to have a natural inflation hedge and be adjusted as prices change Stocks have historically been a great hedge against inflation because companies control pricing power. Therefore, they're able to adjust their earnings with inflation as they increase prices. It sucks for you and me when we go to the grocery store or other places that, cars are way up high from where they used to be. I mean, my kid is, like I mentioned on the previous shows, graduating from college. My daughter will be right behind him, and they're going to have to go into a world where housing costs and energy costs are much higher than they were
Hmm.
even 5, 7 years ago. That is why you must invest stocks, real estate, metals. Like you have to be thinking about things that will give you the ability to keep your purchasing power as purchasing power is being destroyed. And by the way, in all types of markets, that's been true. The dollar has devalued something like 99.2% since it was born. So, and it will continue to. We have inflation targeted at 3.6 or 3.3% right now, targeted for somewhere between 4 to 6% by the end of the year. You've got to be doing something to mitigate that. Got your money in a mattress or buried in the backyard, you're in big trouble. Be thinking about what you can do. Talk to your financial professionals. Don't take advice from the show. It's
Yeah.
just me and Arpit duking it out. As you can see, very friendly version of it. We're going to catch you next week. We're going to come back. We'll have a brand new topic for you, and we'll tell you how the market did. As a reminder, we're not allowed to make predictions about the following week anymore. Our compliance said no to that, so we can't do it. I will say I was right last week. I did predict a bullish outcome, and I can't say what I'm going to predict again, but I will next week. But Arvin and I are no longer competing on that because it's easy to say, well, I was going to say it was going to go up. So
Yeah.
we're not going to play that game. But we do enjoy the show. If you like us, follow us on YouTube, follow us on Spotify. Follow us on Apple Podcasts. Hit the like button, hit the rate button. All of that helps us. And as I mentioned earlier, if I did, I don't know if I did or not, we've got a couple of sponsors that are going to start joining us shortly where you can see some of the things that Arpit and I like and enjoy and maybe purchase ourselves. And if you want to do that with them, we'll give you some special codes that allow you to have some discounts if you tune in and then buy those products. So we're looking forward to bringing that to you. This show's been a lot of fun, Arpit. Thank you for doing it with me. I
Yeah.
can't wait to do it again next week.
Yeah. Awesome. Thank you guys. Take care.
Bye. Don't say bye.